So, if I was looking to build a forever dividend portfolio, I would be looking for a few factors. Most notably, the most important thing I would look for is a business that I feel could survive for decades, that will be around for decades, maybe even a century. That will be my number one criterion when building this type of forever portfolio, a dividend stock I can buy and just hold for a very, very long time. That would be the first thing I would look for. The second thing I would look for when building this type of forever portfolio is diversification. Because I'm not going to be buying and selling and trading these dividend stocks, I would want diversification within this portfolio so that these stocks will perform relatively well over the next few decades, over the next century. Because if one company suffers because of one industry and one phenomenon or one factor, the other companies will not suffer because of those. And ideally, the other companies might benefit when one company suffers. And in so providing some portfolio diversification so that you can earn positive returns for a very long time in nearly any economic scenario. So, those would be the two primary things I would look for when building this type of forever dividend portfolio, which these five dividend stocks I'm going to recommend here, or these five dividend stocks that I would buy if I was building a forever dividend portfolio, include those factors built in. And of course, I would want to find dividend stocks that are undervalued, right? I would want to pay a lower valuation, but that would be less important when I'm thinking about investing for decades. Valuation becomes less important, and those other factors take precedence over valuation. Of course, I wouldn't want to pay a ridiculously expensive price for a dividend stock, but if it's something that's fairly valued or even a little overvalued, I wouldn't mind. Still, these five stocks I recommended are also undervalued according to several valuation methods, which I will share with you in this video. So, without further ado, let's take a look at my five dividend stocks you can buy now and hold forever. The first dividend stock that I think you can buy now and hold forever is the Walt Disney Company. Now, the Walt Disney Company has been around for roughly a century, and I think it'll be around for another century. The company operates theme parks, hotels, and has a thriving media segment where it reaches consumers around the world. It's focused primarily in North America. The domestic market is its biggest market, but it also has operations internationally, so it's not so concentrated in one area. Also, Disney stock is undervalued. When I look at it according to my intrinsic value calculation, my intrinsic value, or what I think these shares are worth today, is $118.76. But you can buy Disney stock at $98.64. A little bit later in the video, I'll share with you Disney's dividend yield and the valuation of Disney using another valuation method, which I also think points to the stock being undervalued. The next dividend stock I think you can buy now and hold forever is Target. Target operates primarily and only in the United States with its retail locations of roughly 2,000. Target and Walmart have figured how to beat Amazon at their own game. The buy online, pick up in store feature has allowed these companies, and Target included, to stave off Amazon to some degree because they can now use their 2,000 brick and mortar locations as a competitive advantage. It will be very expensive if Amazon wanted to build a similar type of brick and mortar presence to counter Target and Walmart. And we've seen how successful Walmart and Target have been in recent years with this strategy. So they've determined that they can survive, they can withstand massive threats to their business, and thereby survive for a very long term. Target is a very different business compared to Disney, so it also adds diversification to your dividend stock portfolio. Target, my intrinsic value per share calculation for Target stock is $131. The current market price you can buy Target for is $104.70. The next dividend stock I'm going to recommend that you can buy and hold forever is Visa. And by the way, if you want access to these spreadsheets where I have calculated these discounted cash flow valuation models, you can get them with a membership to my channel at the investor tier. You can get access to these stock discounted cash flow valuations for dozens of companies, and you get access to my spreadsheet where I have over 100 companies rated as a buy, hold, or a sell. You also get my stock price targets for 2025 and 2026 on multiple companies. You get all that with the channel membership at the investor tier. So, Visa, also a financial services company that operates around the world with over 4 billion Visa cards outstanding. It has a very strong competitive advantage it has built over decades, and it's likely to be around for at least a few more decades, perhaps even much longer. The financial services network it's built is extremely robust. Now, you can buy Visa stock today at $332 per share, and it's intrinsic value, according to my calculation, is $344.81. Also, Visa, as you probably already noted, is very different from Target and the Walt Disney Company, so it also adds that diversification to your portfolio. Bonus, with Visa, you also get protection against inflation to some degree because Visa takes a percentage of every transaction that happens using its network. If nominal prices increase and inflation gets out of control, the percentage that Visa will take, the revenue will increase because people will be spending more nominal dollars, and so Visa's revenue will increase. It'll be strongly correlated to inflation. So you'll get a degree of inflation protection to your dividend stock portfolio by owning Visa stock in that forever portfolio. The next dividend stock that I think you can buy now and hold forever is Microsoft. Of course, Microsoft has a stranglehold in the enterprise PC category, in the enterprise, I should say, operating system category. Its operating system market share is extremely robust, and Microsoft has a good start in the AI transition and is selling those services and its investment in OpenAI and ChatGPT. If artificial intelligence and OpenAI specifically were to soar in valuation, Microsoft will benefit as a result. So Microsoft giving your portfolio diversification through multiple methods. It's very different from the three companies I mentioned already, Visa, Target, and the Walt Disney Company. And Visa stock is also undervalued according to my discounted cash flow calculation. Its shares are worth $447.71, but you can buy them for $388.56 today. And last but not least, McDonald's. Of course, McDonald's in the restaurant business, in the food business, very different from the previous four companies I've already highlighted. And if you have these 5 dividend stocks, they're very diversified, operating not just in North America, but worldwide, and operating in different categories, serving different customers. McDonald's is also undervalued according to my intrinsic value calculation. It's worth $374 a share. The current market price is $299 per share. McDonald's is large enough in scale to be able to invest in the latest generation technology. It's already employing artificial intelligence at its restaurants. It's already employing technology that's automating services with the app and the cashierless checkout inside the locations, which will allow McDonald's to transition in this next generation of tech advancement. It's shown great ability to invest in this next generation technology. Now, I highlighted that I would share with you the dividend yields of each of these stocks I mentioned, and the highest dividend yield here is with Target at 4.27%, McDonald's at 2.3%, Walt Disney at 0.96%, Microsoft at 0.1%, and Visa at 0.67%. But if you remember in the beginning of the video, dividend yield was not one of the main factors I considered when building a forever dividend portfolio. The factors I mentioned earlier will allow me as a dividend stock investor to benefit from rising dividends. So maybe right now the dividend yield are not that exciting with these 5 companies, but what I would be excited about is the potential for dividend increases over the next several decades. As you might imagine, if these companies are around for several decades, they're usually increasing their dividend, if not every year, perhaps every few years. And with rising profits comes rising dividends because these companies have mostly built out their business. They don't need to reinvest a great percentage of their free cash flow into expansion. Their reinvestments are primarily for upkeep and not for expansion. All of these, except for Microsoft, of course, which right now is investing aggressively building out its AI capabilities, which should also pay dividend stock investors in the long run because those investments today will generate profits for decades and deliver for dividend stock investors. And I shared with you my valuation according to the discounted cash flow models. But even if you look at these five dividend stocks on a forward price to earnings basis, they are not expensive and they look undervalued. The most expensive here being Microsoft at Microsoft and Visa at a forward price to earnings around 26. The others are lower than that. The McDonald's at a forward PE of 22, Target at only 10, and the Walt Disney Company at 16. So with these five dividend stocks, you're getting diversification. You're getting companies that are likely to survive for decades, if not centuries, and you're getting them at attractive prices. So for those reasons, if I was building a dividend stock portfolio that I could buy now and hold forever, this would be a solid portfolio to begin with. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.